Now, the Bank of Ghana has indicated that it will press ahead with policy measures aimed at sustaining Cedi's recovery. The assurance follows concerns about the sustainability of the local currency's recent good run. There is more in the following report.
One of the key measures that the central bank is planning to continue is the policy rate hikes. This, it believes, will go a long way to reduce the excess Ghana cedi in circulation, which is feeding into dollar demand on the market. The central bank believes that previous hikes in the policy rate and other policy measures have contributed in checking the amount of cedis in circulation and reduced inflation rate to the current levels of 20.9% for the month of July. It also believes that some of these stabilization measures have helped in the cedi's recovery, and it might not be good for now to take its foot off the paddle. It is for this reason why the Bank of Ghana is also pushing back on demands by some businesses that it should move quickly to reduce the policy rate from the current 29%. But the central bank believes that the policy rate should be seen as a tool for now in containing inflation and stabilizing the Ghana cedi. The Bank of Ghana believes that its monetary tightening measures, together with its strategic dollar support for the market, should go a long way to ensure that the recent performance of the cedi is not described as a flash in the pan, but could be sustained going forward. But there are some who have the school of thought that the real test of the cedi will be seen when demand starts picking up again in the coming weeks for firms that are trying to import for the Christmas festivities in December.
Now, let's get on Zoom and speak to banking and finance lecturer, Dr. Benjamin Amoah. Welcome to the show, sir. Now, what do you make of this measure by the Bank of Ghana to help sustain the cedi's stability?
Thank you very much. At this point in time, the central bank is making use of different tool sets and different strategies to help stabilize the value of the cedi. So a monetary tightening approach basically means that cedi-denominated assets will have higher yield or higher interest rates, just so that the central bank will be able to mop up excess liquidity in the system and also possibly attract more external funds into our market, because compared to other assets, cedi-denominated assets will be more attractive, and through that we'll be able to get more dollars or hard currency to come in as a way of increasing the demand for the local currency.
Doc.
And once the central bank succeeds in increasing the demand for the local currency, all things being equal, the price of the cedi should stabilize against the major international currencies.
Doc, is this measure quite sustainable from where you sit?
Yes. It's a good question to ask. It is not in the long term sustainable, because as you increase the rate, indirectly what you are doing is that you are increasing interest rates on the market, and that will hurt businesses. Businesses will not like to borrow at these high rates. It will also affect productivity, and it will affect unemployment. At the end of the day, if businesses are not able to borrow, produce, and employ, it will affect your economy, in terms of economic. So in the interim, yes, you may want to use this particular approach. But if we're looking at the medium to long term, then you may want to have other strategies in addition to this, so you don't sacrifice one aspect of your monetary policy for the other. In this case, if it's sustained for a long period, it will affect the growth of the economy.
Now, what do you make of some who might argue that this monetary tightening measure is a bit, probably could hurt businesses in the long or short term?
Yeah, it is right for experts to hold that opinion, because simply what it means is that rates are high. Rates are high. The market means that if you are going to borrow, you are going to borrow at a higher cost, and this high cost will be fed into pricing, with the assumption that loan cost is a major influencer of input prices, and that will affect prices on the market. We are going to consume goods and services at a higher price if this particular strategy should be sustained over the long term. But we should not forget, inflation itself is also a factor into the monetary tightening framework. So if we can get inflation under control, if you look at the market basket that is used to calculate or estimate our inflation. If all the variables in there or some of the major components can be brought under control, then that will feed into the overall inflation, which will also pull down the monetary policy rate. So over the long term, it is not sustainable because it will make prices expensive. But for the immediate term, the central bank may want to use this just to stabilize the currency for some time.
Look, this is a central bank action. Now, what would you suggest, basically, be it from the government's angle, to complement the effort by the central bank?
For the government, what the government must do is to, again, it's going to be difficult because we are in election years. You know, the government will try as much as possible to make the economy as liquid as it can so that the complaint that the system is tight and the system is hard can be minimized. That means a lot of money must go into the system. Meaning, let's spend. Project, construct, commission, project, just to make sure that the system is a bit liquid. That is from the spending side. But you see, that will also hurt this particular decision by the central bank. And we need to understand that at this point in time, with about 4 months to a major election, the temptation to be disciplined becomes very, very difficult for the government. And if you have watched the data over time, when it gets to times like this, it is all about elections. It is after the elections that we'll sit back to rework and get the economy back on track. So if you are talking about the government side, the government will try as much as it can, but the government will still like to win the election through spending. Genuinely, or maybe not genuinely, but the fact that the government will spend, it will hurt Bank of Ghana's policy as stabilizing some of these major macroeconomic variables that impact on all of us.
Dr. Benjamin Moore, thank you for your time here on Business Live. Now let's move to some agric-related story. Some farmers in the northern part of the country are lamenting about the impact of the weather on their activities. Reports suggest that farmers are struggling to water their crops as farmlands are left to the mercy of the weather. Let's go on Zoom and speak to Dr. Charles Nyaba, who is a farmer, and to bring more updates. Now, good evening and welcome to Business Live. Now, tell us, the situation with the drought in the northern part, how serious is it?
Good evening. Let me say good evening to all the listeners. I think the situation is a bit dire, and I would like to make this clarification. When we talk of north, we are talking about the 5 northern regions, but the drought belt is not in all. When you take Upper East, for instance, had the intermittent rainfall there, part of East, and then part of Upper West that is closer to Upper East, that's the Sala East area. The situation is more serious when you take places like Yendi, Busiegu, Tatali, Zabzogo, Chefone, then we come to Kumbungu, Nantong areas. That is typically northern region. Then part of Savannah region, we are talking of places like Shola, Dimangu, and then Salga areas. Then part of Bono region, that's Atebugu, Intempo, Ichima, and Nkwanza areas. And the crops that are more affected are maize, because maize cannot withstand drought. So you go to places like Yendi and you have thousands of hectares being completely dried out. You take other crops like rice, thousands of acres too have dried up. But other crops like sorghum, yam is a bit better. So the situation is that serious when it comes to maize, and I think we need to prepare for the shortage that is likely to happen.
Dr. Nyaba, normally at what point do farmers expect the rains to come within the season?
So for the past 1 decade, we have seen some changes. You know, when we were kids, we used to plant in northern Ghana around early May and then later part of April. But for the past few years, we've been planting in first week of June and second week of June. So this year, for instance, if you take the Sala East, You take Asnan and Kana areas to Kusiga, Garu areas. They were fortunate to plant around the first week of June. But when you take a northern region, usually they plant a bit earlier. So they plant last week of May or first week of June. And that actually happened this year. So in the middle of July, those who have already planted in first week of June and last week of May, their crops were ready for fertilization when the rain stopped. So today you visit all those farms and the farms are completely damaged. Now the farmers who plowed and they didn't plant, majority of them cannot plant again, especially May, because the season is over. If you plant, you may not be able to get enough rain to harvest. So it will also affect the total quantity of acreages that will have planted those crops.
Based
so
on,
that is the,
all right.
the situation in the north. Now let me put a bit throw a bit light on the middle belt, which usually the discussion is always around the northern Ghana, but it is not the case. Techiman, Kintampo, for instance, the information I picked is that for the past 2 months, they have not received any rain. So those who planted earlier, their crops destroyed. Those who have not planted, they missed the whole of the major farming season. You know, those areas, they have 2 farming seasons, the major season and the minor season. So they are now planning and waiting to plant the minor season crops.
Doc, based on the signals in those hotspots you've cited, Techiman and some other parts of the northern region, we've already seen food inflation coming down in the last reported statistical service data. Are these indications that in the subsequent months to come, our food security is going to be under threat?
Yeah, under the normal circumstance, as I mentioned earlier, the middle belt would have been harvesting their maize now. So around this time, previous years, we would have been struggling to sell. Prices would have started coming down. But go to the market today, I found out prices are going up. So it's obvious we are not going to experience the bumper harvest that we experienced previous years. Now, if that is going to continue until we get to the end of the season, I mean, supply will definitely be lower than demand. And it's a simple demand and supply theory. When supply is higher than demand, prices will go up. So I think we should all be prepared to continue to bear the higher food prices.
Finally, Doc, before I let go of you, based on these, what do you suggest basically should be the kind of immediate government intervention to help remedy the situation?
One, I think that these food security issues are very serious that we shouldn't joke with. Those farmers who lost their farms completely, I spoke to about 5 farmers today, and they lost more than 50 acres each. And they said there's nothing they can do. That if they have resources, maybe they will have tried to just replant again. So those farmers, we need to identify them, support them with seeds, support them with fertilizer to start again. 2, governments should quickly put in measures in place so that when we produce, the little that we produce, we mop them up. Last year, I gave this recommendation that the best way for us to be able to address food shortages when it comes to this time is to mop up during the bumper harvest. Government never took that advice. They allowed the Burkinabe and the Togolese to come and mop everything. And that's why we are experiencing the shortage now. So we should just put in resources to ensure that the little that we produce will mop them up, and during the rain season, release them into the market.
Dr.
In the medium term,
all right.
In the medium term, what we need to do is to begin thinking of how to store the excess water that is coming from the precipitation and then the spillage of the Bagre Dam, so that farmers will be able to use them during the dry season.
Dr. Nyaba, we appreciate your time here on Business Live. We'll come back to you in our subsequent bulletin. Now, moving on, Cocoa Board has maintained that it will stick to the forward sales of cocoa beans despite rising prices of the commodity on the international market. The price of the bean has started rising on the world market again after recent decline. It is currently selling at more than $7,000 a ton. This has brought back argument that Ghana must review the way it sells the country's beans. But answering questions at the Public Accounts Committee today, Chief Executive Joseph Boahene Eidu, current development doesn't make it prudent to opt for spot sales.
can be either spot or it can also be forward or future. And I want to crave the indulgence of members so that I do a little explanation on the fundamentals. The whole thing is that, not that we don't do spot, we also do spot, but we sell most of our cocoa forward, that futures. The point being that, Chairman, let's take it that you are a buyer based in Europe, Ghana Cocoa Marketing Company. What happens is that when you come to Ghana to buy the cocoa or buy the cocoa on the international market, ordinarily you buy the cocoa not for today's use, but you buy the cocoa to be used in the future. Normally, buyers plan ahead of time, 6 months, 1 year, sometimes even 18 months ahead of time. So when you come to buy the cocoa, it means that you are taking the cocoa to Europe to stock for 6 months, 12 months, or 18 months. We should note that cocoa is a tropical product. And taking it from here to Europe, you have to ensure that, the condition, the characteristics are thick, because you are sending it to a temperate environment. And there's risk in that. Taking it there to stock in Europe for 6 months, 8 months, you have to pay a higher cost in keeping it there. Number two, warehouse costs in Europe is higher than warehouse costs here in Ghana. The same goes with insurance and logistics, other costs as well. So the buyer will rather prefer that the cocoa is kept here, stocked here at the buying place than taking it to Europe. And if it's going to cost, let's say, $500 as an additional cost to him, and he can get it here at, say, $200 as an additional cost, he will prefer that he buys the cocoa today, but to be delivered, let's say, in December. And that's what, simply means as the forward or the futures. And every buyer will want to prefer that because it's more or less costly.
Now we have more development from the Chabo gas processing plant right after this break. Stay tuned. Welcome back to Business Live. Now to more news. A Chabo gas processing plant in the western region has resumed work. This was after it was shut down for plant maintenance works. Joy Business understands this was done some 2 weeks ago. Judge Biafre has the rest of the story.
This should mean that they were able to start work way before the target date for resumption of work. The Ghana National Gas Company last month announced that it would be shutting down the plant from August 1 to August 17, 2024 to help with some maintenance works. Maintained that the works was also to ensure that it safeguard assets and cost of operations as well as power generation in the country. The development should come as good news when it comes to power generation, as gas from Atuabo came across as cheaper source of fuel for the country's energy firms and even some manufacturing firms in the country. The plant was also a major source of LPG supply for the country. But for the Ghana National Gas Company, this work was needed badly to protect the infrastructure, as any delay would not be good for the country.
Now, moving on, the head of FinTech and Innovation at the Bank of Ghana, Kwame Opon, has debunked the assertion that the central bank issues about 5 licenses to FinTechs in order to operate remittances. Mr. Opon emphasized that only 1 license each is required to operate inward remittances in partnership with commercial banks. He spoke to Joy Business on the sidelines of the Graphic Business Stanbic Breakfast meeting in Accra. The Graphic Business and Stanbic Breakfast meeting focused on the theme Remittance System Impact on the Economy. Speaking at the event, banking consultant Dr. Richmond Ichiahine raised concerns about the discrepancies between the World Bank's data and the central bank's data on recorded remittances.
Disparity between 2.8 and 5 billion. How much is it? 2 point something billion, is it? Yes. That is what we are saying. If you make one statement there, and then on your other statement, when I validate it, it doesn't come together. It doesn't sync together. Because the Auditor General statement is signed by the auditor. And the governance statement said 22 billion for 20. So when I trace and track to the auditor statement, there is a disparity of 900 million.
Okay.
And then 5 points. So, Mr. Fintech, Mr. Pong, could you please elaborate and explain this disparity?
Head of Fintech and Innovation at the Bank of Ghana, Kwame Opon, explained the discrepancies between the central bank's remittance figures and those recorded by the World Bank.
It's been an unfortunate misinterpretation of the data because I think the data is available for everyone. And you would notice if this were the case, I think there are enough people in the country who are looking at this data, both investors and in fact the World Bank themselves would have come out to raise that issue. There is no such thing. I think what you see is the annual reports reporting a net position of Forex in terms of remittance inflows versus outflows. And then you have our typical MPC reporting that highlights what comes in, what goes out, the inflows and the outflows. I think this is very standard. It's been the case for a while. But also particularly I should highlight, I think people often misinterpret publications about the sector in itself and its contribution to effectively represent an exclusive data set. But unfortunately, as I've highlighted in this conversation, fintechs work through banks. So whatever a fintech is disbursing actually comes through a bank. So it's reported. If you go about counting it separately, you're doing the whole counting.
Head of Everyday Banking at Stanbic Bank, Renel Bedu, highlighted the significant role remittances play in transforming the economy. That'll be what we bring you by way of business here on Business Live. We'll be back with more news for you on the Prime Business. My name is Winston Taki. Thanks for watching. Enjoy the rest of our programs. Bye-bye.